Hey, what's up, everyone? Welcome back to the Mortgage Heroes Weekly Podcast. I'm Andy.
I'm Brian.
And I'm Will.
And today we are back. Welcome you just a couple days after Memorial Day. So thank you to all of our loved ones and to our family and our family of viewers who have family members of your own who were lost standing on the front lines of serving our country. We thank you, and we have been thinking about you leading up to Memorial Day, obviously, and also on Memorial Day. So thank you very much
for appreciate
the ultimate of all sacrifices.
That's right, Andy. Thank you for that.
Yeah. So today, guys, we're kind of on the heels of that. And one of the biggest things that was happening prior to Memorial Day weekend was the big, beautiful bill, and that getting through the House, and then that coming now, I guess, in the Memorial Day week back to the Senate, or not back, but to the Senate, and figuring out what that's going to mean for housing. So we're going to start there today, talk about that. We got some inventory stuff to talk about. We have $1 million starter homes. There's a lot on deck, so I think we should just get right to it.
Let's go.
All right. So, guys, the House passes reconciliation bill with LIHTC provisions, and people are like, what are LIHTC? This is lower income housing tax credit provisions. So the acronym LIHTC stands for lower income housing tax credits. And so the big, beautiful bill, as it's being billed, did pass the House and went to the Senate, and now it's going to go through the whole process of that to figure out if some of these things that are tucked in it for housing will even see the light of day.
Yeah.
So are you optimistic about this? Are you pessimistic? Kind of what's your stance on what this means for housing?
Well, I'm very optimistic with it. We do need it. And so we need to incentivize. We've been talking about this for a few years already. To increase our supply of homes that's greatly needed, we really need to incentivize our builders. So this is something that's going to really bring affordable housing. And I think I'm totally for it. Of course, like any bill, there's going to be a lot of things that maybe not pertain to that. And so I'm hoping that the Senate cleans it up and, we just put it into play and figure out how these builders will just gain that momentum and start building.
Are you talking about like scraping out some of the wasteful things that might be just kind of slid in there and hidden underneath other
That's
things?
correct. And I mean, we already know no bill is going to come out perfect.
Yeah,
there's always going to be that whole trial and error. So we really need to see what this bill is going to be consistent on and, what things we're going to need to address sooner rather than later and just either remove those.
Yeah, I'm very hopeful that, the bill passes and what does come out of it are things that are actually not just temporary solutions and that they can actually stay in place and make a difference for, buyers that are struggling to, afford houses and sellers to get a little bit more ease and, hopefully more offers as well. But I think, like Will said, no bill is perfect and I'm sure there's going to be friction coming out of it. But like I said, I'm very hopeful that the things that do come out will help buyers and sellers.
Now, something that we had talked about even in 2024, and I think only once or twice so far this year in 2025, was the idea that areas that are previously restricted from building and from development might be unlocked through this. And this article brings up the Opportunity Zone program, which had started years ago. And this term has been used in other parts of our, I'll say, real estate history. Yeah. When an area gets like devastated from natural disaster, and there's like the go zone. Remember that from the Gulf? When was that? 2000.
A long time ago.
Now, I don't remember what year that was, but anyone who remembers the go zone, put that in the comments. But so things like this where like you need to attract and entice people to come into a devastated area and like rebuild, or in this case, areas that were previously restricted that need to be unlocked or can be unlocked in order for there to be building. So I think I'm optimistic about that part. I'm always concerned about whatever else is tucked in there, like you're saying, because I'm like, there's so much waste that just gets like shoved into bills because, the main thing we're fighting for is the most important. So we have to deal with this other garbage. Well, okay, we just take it on. We take it on. But man, that's really been hurting us. And this Opportunity Zone program, though, if it can get continuation and extend some housing supply, I think that's only going to help us.
Yeah.
So one of the things that came up, and talking about the things that get thrown in the bottom or just kind of put in there, is they talked about Medicaid and Medicare. And what I wanted to see is what really is happening, and why are people having such a huge reaction to what's going to be happening, or is it all just hey, this might happen?
There's a couple layers to this in my opinion, and this is just me and my own like personal effects, right? Or my personal position is, so first of all, there's a lot of argument about how much of what's being cut is actually waste, fraud, and abuse, and what is actual benefits that people will have taken away from them. That part is unclear. I know that one side says one thing and the other side says another. There's that issue. The other issue is part of what makes those programs so expensive are the associated costs of the healthcare. And we've talked on this show before, the two largest industries in our entire economy are real estate and finance, number one, and medical care, number two. Yeah. So healthcare being like the second biggest, and we're talking about trillions of dollars of industry size here. Now, it's one thing that, there's some regulation on how much things can cost and whatever, but then we start cutting things, well, then are they going to reduce the price on the provider side? There's that issue. Mm-hmm. There's so many layers of complexity to this that I'm not saying it's impossible, but you have to really know these things inside and out. And I have friends that are in group insurance, and they've been there for like 30 years. And they're saying like, hey, not all these changes are going to be bad. Some of them will be, but some of them are necessary because of the bloat. It actually causes more expense that's unnecessary that you can carve out and, like, let's say, trim the fat a little bit. That would eventually help even in a bill like this.
Yeah, and the reason I ask because I am no expert in this, and I just, to the naked eye, they see this 10 million people being removed from, these aids. It's kind of alarming. So I just thought, people really need to understand the situation, the details to really make a decision. And I don't think it's, as bad as people are going to portray it to be. The headlines are going to be the headlines and people are going to attract to that. That's, that's a given. But I just feel that if you really read between the lines and you carefully understand what's happening, you can kind of put two and two together.
Yeah. Something I'll share with you guys that a friend of mine shared with me is like, when people get a really big bill in the mail from medical service they usually call the insurance company and they yell at the insurance company. And the insurance company's like, I don't set the price. The hospital does. Yeah. The doctor does, or the specific, let's say, test or exam you had. Like, so when we go to a store and we pick something on the shelf, it has the price tag. When we go to a restaurant, the menu has prices. You go to the hospital, no menu, no menu. Prices. Right? So all these are hidden. And how many times do you go before an exam and go, how much is this going to cost me? We don't even ask.
Yeah,
so
we just go.
There's this whole other behavioral style that happens when it comes to this, where the prices aren't in front of us. We don't ask as consumers, and then we end up with a bill, and we yell at the insurance company, and we yell at the provider. Yeah. We don't ask them, hey, why is it this much? And when you do ask, they typically actually have an insurance provider price and a cash out-of-pocket price, and they're different.
Yeah. I mean, that's the same way it goes with the car. Anything that has to do with insurances, it's like you're not paying attention to the pricing. You're just hoping that your insurances has the proper coverage. Mm-hmm. And, that's why it's so important to always look at your personal coverage, your dwelling coverage, mm-hmm. which is going to protect your house. It's going to protect your car insurance. So, yeah, we're never going to ask prices, but absolutely. If I get an fender bender and I'm like, well, wait a minute, his light just broke. And next thing you know, it's like a $5,000 bill. It's like, well, what the heck or why?
What does that light do?
Well, it's because, the person that you hit, if you rear-ended them, you're at fault. And now they're going to go and look and see, I got to hire an attorney. My neck all of a sudden hurts, right? There's all these other fees, costs that go associated with it. So, I think people call insurance companies, Andy, because I'm like, that's too much for that. And so I am not going to pay $5,000 for that light, and therefore insurance, don't pay them, right?
Well, they're the ones typically sending you the bill. Like, hey, we covered this much. Here's how much is left. And yes, every once in a while, I know people get bills straight from the doctor or straight from the hospital. I mean, I have family that's been their situation. But what my friend was telling me is typically people come, they just yell at the insurance company, like, why aren't you covering all this, whatever. And it's like, and we fly completely over the fact that it's a $50,000 pill of Tylenol. Like, now I know Tylenol's not $50,000, but I mean, like, they're like $2 or $1 a pill at the store if you go buy it. If the hospital gives it to you, it's $100. I don't know what the deal is. So
no, totally understand.
One thing I do want to talk about though, separate from this, because we were talking about opportunity zones, and I know that tucked into this is the whole Medi-Cal or Medicare or Medicaid thing, but one of the things is I noticed that there's a timeline on this too. So what they're hoping is that any bonds that are financed through this new program, that they have to have an issue date of December 31st this year through January 1st of 2030, which means they want a 5-year window of whatever's going to be executed and built like happening now. Yeah. But our normal, I'll say gestation period of bringing new houses online, depending on the area, can be like 18 months, 24 months.
Just that alone.
Just for permitting, grading ground, and preparing a place. And we're talking about a place where we live where the weather's good 350 days of 365, let alone these other parts of the country where they have to deal with real weather.
Yeah.
Yeah. Nope.
So what you're saying is that essentially the timeline for these houses to be built is going to be cut to 5 years rather than, usually permits just alone take 1 to 3 years, and that's before you even break ground.
One of the elements of the bill bill is to lower the bond financing threshold, but between a specific period of time from December 31st of 2025 to January 1st of 2030, which is literally a 5-year run. So it's almost like, okay, you have 5 years, go as much as you can. Yeah. And so then it's not that you can't do stuff after that. It's just that the lowering the bond threshold has that window. And so if that's the case, it would seem to me that they're tipping their hand that, hey, we want you to go and do this right now. Not like in 10 years and 15 years. Like, do it now and be done by 2030.
I think that's very smart because it really forces that incentivization, yeah, for them to be actually, make a move, because they could just be like, yeah, but we can kind of weather the storm. We got 10 years. Let's see how the market plays out. We know that's there, but now it's like, yo, you got these 5 years. You can really do, your building that you really want. So let's see it. I'm actually, excited to see how that plays out these next 5 years.
No, absolutely. That financial incentive that these builders are going to get, I think it's going to bring other probably builders that weren't. They were just on the sidelines as well, and now they see this credit that's going to be out there. Well, why not take advantage of this? At the same time, also the government's going to just see, hey, in 5 years, let's see what the permitting process is, who's going to apply and how many, right? Maybe we could extend this afterwards. Yeah. So it could do a lot of good things.
That's a great point, because how many times has something started that way and then they do a continuation or an extension? I didn't even think about that in preparation of this part, but that's a great point. I was thinking 5 years, the window's closed, be done. As to accelerate some of this action being taken. But you're right. Sometimes like, oh, hey, it worked and people want more of it. So let's actually give them more, like 2 more years, 3 more years, something like that.
And I mean, in this bill, what they're looking at, they're building like 500,000 homes, which is going to bring more affordability to, renters, where they're going to not have to compete. Because I know like in some areas here that we live in, Eastlake, they build them only in certain little pockets. And next thing you know, those things are gone, and they're gone quick.
Yeah, gone before they even finish building.
And so that's going to be a good thing. It's going to bring more stability also to home prices, I think, for people that are just, hey, sometimes like, I have a family member that rents a 3-bedroom, 2-bath, and they're only paying $1,200. That's unheard of. Like around here, it's just unheard of. You know what I mean? But there is some people that are only earning also single family, one parent homes are only earning 33, 45,000, and after you do your taxes and all that, you're really not bringing in much. So your affordability is going to be not there to purchase a home, but you could also live in a good area. And these areas in Eastlake, I consider to be very good areas, especially when there's new colleges coming up.
Yeah, there's a lot happening here for sure. I think the prospect of there being 500,000 additional affordable homes is a great. So it's something that the administration has tasked all these agencies with. Yeah. And if this is part of the bill, again, I think this is moving down the field towards a touchdown versus getting stopped altogether. Because whether they're on the left or the right of the political aisle, they're all being confronted with the same problem in the places that they represent, which is there's housing. It's an affordability issue, or it's an inventory issue, or it's both. Yeah. And so regardless of which side of the aisle you're on, they're being faced with this problem, and I think this is a good solution.
No, absolutely. In both sides of the administration, right? I mean, whether you're said like you're right or left, this is a problem that we all have. This has nothing to do with what administration's in or who's out or et cetera. This has to do with the reality of stuff that we're going through.
I mentioned that at the beginning of this current one, though, there was pressure put on Fannie and Freddie and HUD and FHA, and it's like, hey, you all need to solve this problem. And I think that the publicity of that is kind of that heavy-handedness of the current administration that is making stuff like this have to happen, because I don't think they're going to take no for an answer.
Yeah, I like that.
Yeah, so.
No, absolutely.
Well, let's move on to this next one, guys, because this is April home sales dropped to the slowest pace for that month since 2009. Now, before it's like, oh, this is outdated information. This is one of those lagging indicators where once the month concludes on April 30th, then the analysis comes out and the information is shared. We get this kind of stuff maybe mid-month, end of the following month, and that's where we find ourselves today. So in this, we saw that home sales have been at 75% of normal or pre-pandemic activity for the past 3 years, even with 7 million jobs added to the economy. So you have a lot of new jobs. Again, Memo brings this up all the time. Maybe they're real jobs, maybe they aren't.
Yeah.
The other thing
we never know.
They might be someone taking it might be a second or third job, not just an additional person working. But 75% of pre-pandemic activity is good on one side and really sucky on the other, because that 25% gap is really huge when it comes to putting shelter over people's heads.
But I like how the article still says, even despite, that the situation in April, the median sales price still increased by 1.8%.
I know. That's the thing, is this whole price argument that everything's going to fall off a cliff. It's just not prevailing. It's not happening. You can selectively look lower or in more micro areas and see that there's price sliding by double digits in certain pockets, but the overall trend is not going that way. So the overall national chart doesn't look that way. And even with more inventory coming now than there were before. Now, it can say that home sales dropped to the slowest pace. That's still a pace. It's not a negative pace. It's just that it's slowed down the most since 2009. And again, here we are comparing 2025 stuff to 2009 stuff, which is not of equal comparison. The variables are different and the conditions aren't set the same. But I'm optimistic that what we saw in April represents a 4.4 month supply of homes, which is way up from where it was before. I think it was like 3.5. Yeah. So that statistically is up by a lot. And that's only going to help us, I think, when it comes to like chipping away at this inventory issue.
Exactly. And this is what we got to consider. And this is, I love the article, but you already say the articles always bring like this doom and gloom type of situation, right? In this case, what we really got to think is, in the last 5 years, available homes have been so low. And we saw in 2022, it was like 200 and some homes available. Now we're like at 700 some thousand. It was like 796,000 available. So more inventory brings more options for buyers, right? And the other thing is, the way sellers are looking at it, this could be the new norm. This is the new reality. So I just got to put my house on the market, take advantage of the capital gains tax. If you're single, it's $250,000. If you're married, it's up to $500,000. A lot of people want to just take advantage of that and just say, you know what, so be it. I put this rest of the money into a nice, stock market. We already know this administration is all about that. We'll put that maybe, and it's going to grow at a faster rate than me putting all this money down on my home. I already know what a comfortable payment is. So I'm going to put just enough of a down payment to be comfortable right out the wave, right? And then in addition to that is what I feel is, because we do have so much supply, I feel like buyers are saying, and they're falling out because we also read cancellations at our all-time high. Well, when there's more inventory, if I lock in my deal and I'm currently in escrow, but you know what? A lot of times our realtors are still keeping on that search. It's not like, oh, you found a home, we're going to take you off that search. You know what? Another house may pop up. And so your realtors are training your buyers that keep your eye on the trigger still. Just don't be, because we still have to do our due diligence on home inspection. Sorry, Andy, I'll get to
No, you're good.
On appraisal value. So, just keep your eye on something. And realtors are there to make sure that buyers get what they want. This is the most expensive purchase they're going to make throughout their lifetime.
Yeah.
So a lot of times it's like, I've seen clients where I don't want that one. The seller didn't give me, certain repairs for this. So I might as well go to this one, maybe pay a little bit, or they gave them, seller credit for a 2-1 buy down or do all the repairs. And they're like, I like that better. Because they came up. So now you have more options, and therefore now you're going to get this thing, a better home at times. And it happens.
No, I like that you bring that up. And it sounds like, get in where the payment is comfortable. If you're trying to put all your life savings or transfer over money from the house you just sold, get in where the payment is comfortable, because down the line, there's an opportunity to refinance and keep as much money of yours in your pocket. One of the things that I have been seeing that I feel that, buyers can leverage this a lot is, if we see that there's increased inventory, give yourself the potential to get, negotiations in a better place for you. And don't ask for the price reduction, ask for the price negotiation, meaning that ask for credits, ask for buy downs, ask for anything that you can ask, and then that's going to break down what they're willing to give you. So go in, ask for as much as you want, and then break down what they are going to give you and take what is needed and what's not.
So a couple quick reminders. So in this same article, they're talking about how last year, first-time homebuyers accounted for 34% of all sales. So here's two parts of that. First-time home buyers are still figuring it out, and we've talked ad nauseum about what ways and what methods they're doing in order to still buy homes. But the 34% was the same as the year prior to that. So you still have this same rate of people that are buying homes that are first-time home buyers getting into the market right now. Now, one of the things I wanted to mention is that you're bringing about inventory and how there's more cancellations. Well, yeah, volume begets volume. If there's more cars on the road, there's going to be more accidents. Same, right? So if you have more inventory coming up to the rise, you have more people getting in. Now, I know that slowing sales is different than total number of volume, and therefore there will be cancellations, and also because they're doing what you're talking about. People are looking for the best deal. Hey, I can still look at places while I've got this one under negotiation. And then the other thing here is that you have, we share a lot of articles with each other, and we share a lot. Hey, did you hear this? Did you see this? What do you know about that? It's not all the same. Do you guys find different stuff than I do, and vice versa? I have not yet seen an article that you've shared with me, or I've found to share with you, that sellers are listing their house because they think the shoe's going to drop. Yeah. Have you?
No.
So the sellers agree that they are listing their house because of some other reason, and that reason on the list of reasons isn't, I think there's doom coming and I have to fire sell my house now. So I think that price lock and the number of new like first-time home buyers that are, or the percentage of people that are buying that are first-time home buyers still is an indication that this is the new normal for people. Because if it weren't the new normal, or if it's not the new normal, then what are we going to call it? I don't have another name. And they're not selling because they think the shoe's going to drop and this thing's falling off a cliff.
No, absolutely.
No, it's not transitory.
Oh my God! Wow, a transitory reference.
And here's the other thing. Last April, what we didn't experience tariffs in the horizon. We didn't even know about that. We also didn't see inventory being as high as it is. It's 20% higher. In some areas, it's actually 40. In areas like San Diego, it's actually like 60% higher. So these things make a difference when we're shopping for homes. Now we have to get creative in the way when we're selling a home. Sellers have to get creative so that they don't last longer in the market. They have to get creative like builders do. When you go to builders, they incentivize the buyers to get in. They're not negotiating price drops. What they're doing is they're negotiating incentives. What is the major thing that a buyer needs and requires? Is it going to be more your home to aesthetically look nicer? So let's give you incentives so you could do upgrades, right? What do you want? Better flooring? You want this? Or some people decide, I want a better interest rate. Okay, let's give you a 2-1 buy down. We'll give you a $20,000 incentives to help you with that, So those are the things that sellers nowadays, what they need to do is look at their home like that, like a commodity. If I'm selling my home, it becomes a commodity. How do I advertise it? How do I show it better? And those are the things we need to start taking advantage of that instead of reducing. And home builders are very smart about this, Andy. Yeah. The reason why they're not lowering home prices is because you get that one bad comp. What happens to
the whole neighborhood? Now everyone thinks they're going to get the same price.
You see what I'm saying? So when we're out there in the market, what we have to do is we have to learn to negotiate, have the proper realtor to negotiate on your behalf so that home price doesn't just, create that lower movement of home prices in the area because you just undersold that property.
Yeah, yeah. It's not to the builder's advantage to do that. It's actually, to your point, it's actually to their disadvantage. It's to their advantage to just work out some sort of closing cost deal, a buy down, upgrades in the house, something else rather than that price, because they're gonna want to keep that price marching along as the market in that area also trends in that positive direction. Even for however slow it's moving, it's still moving in that upwards and to the right. That's what they care about.
Exactly. Go ahead, Em.
No. What I was gonna say is, and it's so smart what you mentioned, because at the same time, you're not shooting yourself in the foot as a buyer, bringing your price of your house down from the get-go. But on the contrary, you're going to save a lot more money. And you can do the math, putting down $20,000, $40,000, $50,000 compared to bringing your rate down 0.5% to a full percent. It just doesn't compare. You're throwing money away. Be smart with your money right now. I think that's the smartest thing you could do.
Absolutely.
Last thought is just know who you're in the market with. So if you are a homeowner right now and there's a developer in your neighborhood or in your zip code, I'll say, and you're competing with them right now, just know what incentives they're offering, understand what other buyers might be looking at, talk to your real estate agent about that, and know how to properly posture yourself in the sales position that's going to best and most adequately net you the result that you're looking for.
Yeah, and this is one of the things that I've been encouraging my buyers right now, Andy, that are fully approved. I tell them, take your time.
Yeah.
Don't rush success, right? One thing I've learned from one of my good, dearest friends is never rush success. You know, you're already approved. You're already out there. You know, explore your options by taking a look and not just falling in love with the first home. Like, really get to go drive around the area, feel that, you know, if you see yourself there. And I think a lot of buyers are doing that right now because now they're saying, I haven't seen this much inventory in years. It's been over 5 years since I've seen that. So why don't I just take my time? I see these tariffs are happening. I see the bond market just being so volatile. Do I really need to rush this? Can I just, and then we'll already know, what do realtors teach buyers? When is the best, when is the most that we see inventory rise?
Sorry, that's the wrong question.
Right? When is the most that we see inventory rise? During the summer.
Yeah.
Spring and summer.
During the summer. Those are the times you're going to get in. You get in before the holidays. That's something that we've taught for many years. So I think a lot of buyers are just like, wait. Let me just, I'm already approved. Let me just chill a little bit. You know, let's just see what happens right now.
Yeah.
And you make a good point because I feel like everybody's like, they have the want to buy, but they aren't fully ready to pull the trigger. And the more that they wait, the more inventory that comes out. And I think that if you're not in the rush, like you have to move out, you're having a baby, you know, you're in a very like, you know, life crisis that you need to absolutely move. This is the best time to enter the market. Take it nonchalant, see what's out there, play your cards, you know, submit some offers, see what the credit's looking like, and then make an idea whether if it's the right time or not.
Exactly.
And if not, just wait till, you know, the right time comes along.
Yeah. I mean, we're seeing a lot of buyers right now that we're doing apps. Loan applications have been at their highest levels in years.
Yeah.
In the last couple of months. What does that tell you? People are preparing.
The want is there.
They're
That's
preparing.
right.
They're preparing. So, you know, just because we're getting this data right now for April doesn't mean that that's going to be the trend.
Yeah, no,
You
it's
know
going
what
to
I
be
mean?
different when we go to June. We look at July and we get like May's numbers and June's numbers. They're going to look way different than this.
And that's why we keep just, you know, beating the drum on, you know, get ready, get prepared, because things could change from 1 month to another, 1 week for another, and if you're not ready, it's going to be very quick for you to catch up.
Well, sure. I mean, if you're out looking right now, you're going to be a closing in June or July.
Yeah.
If you haven't even applied right now, then apply right now, and you're going to be a closing in July, August, or September. So all this wave of let's say volume of applications and approvals and escrows, it's all still coming, and this is not going to look the same when we look back. We get to like the fall, we look backwards, it's not going to read like this at all.
Yeah.
But there's one thing standing in our way, guys. You know what it is? It's the next segment of the show. It is the American dream of a starter home now starts at 1 million in 28 states. This shocked me. Well, hold on. Is that fair? I don't think I should say that.
It is.
I don't think it is, because I was like, wow, how have we come here? But then I'm like, yeah, that makes sense. Because I look at metros when I'm looking at nerd data, like at CoreLogic and all that. I'm looking at like top 50 metros, top 100 metros. I'm like, oh yeah, that makes sense, because it's like LA, New York, San Francisco, Houston, Miami, Chicago, San Antonio, San Diego, San Jose, Orange County. Like, okay, million. I'm like, oh, that makes sense. But then when you just put it like this, I'm all, wow, 28 states, the starter home starts at $1 million. What the heck we do about this?
The first thing I put was crazy.
It is crazy.
So you saying that
It is crazy.
It is just beyond. It's just mind-boggling.
Hey, you know when the government says, yeah, I know, based on the inflation readings, everything's cool, then what about that then, huh? What about that then?
The thing I hate the most, and it doesn't matter who's in the position of power, what I hate is when they go asterisk adjusted for inflation. I'm like, no, that's not actually what I'm paying. I'm paying the actual price, not adjusted for inflation. I'm actually paying the real price.
So who? This is the real price to me.
So 28 states in the nation with at least one city where the median price for a starter home is $1 million or more, according to, guess what month? April 2025. We just talked about April, right? Sales going to the slowest pace ever. Well, is it because of their $1 million homes in these 28 states where there's at least one city with that median price or not? I don't know. But, you know, we talked about this before too. The median first-time buyer age climbed to 38 years. And 34% of home buyers last year were these first-time home buyers. So clearly something's working for these people. Well, I guess it's their work. Hey, that's what it is. It's working. They're working. They're working 5 jobs. Yeah, them and their spouse are working 5 jobs collectively to make all this work. So I don't know, guys. How do we help people here?
This article, I mean, this is redefining the American dream, you know, of home ownership.
Killing it, right?
It's just mind-boggling. You know, I was at the pool this weekend, and one of my buddies, he's like, "Hey, what's going on, Will?" Da, da, da. You know, he knows I'm in the mortgage industry. He's like, "What are interest rates?" I told him, "Yeah, they're like in the high 6s for conventional, low to mid 6s, depending on your credit, you know, with government." He's like, "Well, that's still not so bad." And I'm all like, yeah, in comparison to what? He goes, well, when I bought, my rate was like at 8 point something. I go, oh, you must have bought when I bought my first home back in 2000. He goes, no, yeah, I bought around 2001. I go, of course. But what was a medium sales price in our area at that time? I remember getting a 1,600 square foot, 3-bedroom, 2-bath, and it was $242,000.
Oh my
right?
God.
Payment was like 1,600 and change, and I thought, man, how am I gonna do this?
242,000.
Yeah, 242.
That's how much the Lamborghini Urus is right now, right?
There you go.
Like brand new.
You know, again, that's fast forward 25 years, right?
Adjusted for inflation.
Adjusted for inflation.
Adjusted for inflation. There we go. That's
Oh my
25
God.
years later. So I'm like, of course. I go, at that time, that's not too bad. That's something, but imagine on $1 million home now. Jeez.
Dude.
You know what?
That is just crazy. That's a 7,500
That's just
more or
insane.
less, down, and that's with the 20% down payment. If you're
Right.
paying no down payment, that's going to be like 800, 8,000,
8,000,
more.
8,500.
Like, come on.
We were at an open house this past week and 1.475 purchase price, and one of the neighbors came by. He's like, "Hey, what would it look like to get a payment around 7,000 to 6,000?" I was like, "Sit down, let's do the numbers, right?" And we're putting 15, 20, 30, 40. Like, you're still not, like, even if you went 50%, the rate was at 7.5, maybe even closer to 8, depending your credit. The lowest payment we were able to get was like 7,800, and that's like, I mean, putting like ridiculous. Like now that's just playing around with the calculator and seeing what you can do. Point being is that once you start going into those ranges, it gets really tough to support those payments unless you have a substantial income. But one of the things that they did mention is like, well, what do the options look like if we were to buy down these rates? If we were able to buy down, what incentives are available? And that's when things get a little bit better. If you're purchasing in these high price ranges where you can snag a 2-1 buy down, bring your rate down for like 2% at the beginning of the year, and then that's going to ease you into that tough mortgage payment. Although it's still going to be pretty high down the line, there will be at the end of the tunnel for you to refinance.
Exactly. I mean, the payment's going to be high. 1.4, that's going to be about a 10,500.
It was 900 and change.
You know what I mean? Because what people don't understand is property taxes usually here, the way we calculate it in California, it's going to be 1.25%. Well, 1.25% at 1.4, you're talking about taxes being like $1,400 more or less. Yeah. That's already
that 3-bedroom payment for.
But this is the problem that I think that from the outside looking in, everyone's having, which is how do we even start, right? And we've talked about people getting roommates or having co-signers or whatever, not having 19 jobs or whatever it might be, because the reality is when you look at the numbers of this, California has 77 of these types of cities, which represents 24% of the total cities in California. 24%. Number 2 is New York, and again, this is how crazy the distance is between these two. California, 77 cities, which represents 24.4% of the cities. Florida, 25 cities with only 7. Yeah. That only represents 7.5% of the cities. And then New York. Sorry, I said that out of order. New York is 10 cities with 12. That represents 12% of their cities that have starter homes with a median of $1 million or more. I was really surprised that Colorado was neck and neck with New York. I know there's a couple places in Colorado that you consider like really ritzy or whatever, like, Aspen and all that, but I didn't think that there was 10 cities in Colorado where the median starter home was $1 million or more.
I know. I was just at awe when I saw 77 in California. I'm like,
That's
along with the gas prices, all the other taxes that go into this, like, geez, is there anything else you need to add to this? That's just how do millennials and Gen Zers going to do?
The way that like that one guy Brian from like a month ago where he like bootstrapped it, dude. This kid he was referencing this article, and then basically he's the person who everyone else is competing against right now. He's kind of like our avatar for like the first time young home buyer who was just like was super diligent about saving money, applied, kept his credit good, and then went and actually got a house, negotiated terms, and had closing costs in it. So it's like that's all the stuff. And there's occasions, of course, where even we know where people they're bringing their friends in and having them rent a room or rent out multiple rooms or whatever the deal might be. But it's just that flexibility that has to be in place right now.
One conversation I had with one of the neighbors there, and just to give you a little bit of context, the people that showed the most interest in the property, we asked them what type of financing or how would you purchase the house. A lot of them were either business owners utilizing bank statement loans or acid depletion products. Now, one of the things that stood out to me when I was talking to Lesia, which was one of the neighbors there, is that she's like, hey, we want to buy the house. We've been renting here, Jesus, since 2008 when we lost our property. Around that time, we've been renting here. And, I just don't feel like we can afford it. And I asked her, like, well, what makes you think that you can't afford it? She's like, well, 2 years ago, we went to go apply for a car. I applied for it. I got denied. My husband applied for it. He got approved. He worked for the government at the time. I had just started my my business, and she has a Spanish teaching school over in Mira Mesa area. And she's like, yeah. So when I first started, I went to go apply for a car. They said no. And, since then, I'm like, oh, if I can't get approved for a car, I won't be able to get approved for a purchase. And, long story short, I asked, did you know that you're able to use loans that, don't utilize any actual your tax return income, but rather go based off, your actual income, which is, your business. And that completely blew her mind because she was under the assumption that she was not able to get approved because her taxes aren't able to get approved. Fast forward, we're going to be able to, get her approved, see what her income is. She's been reporting from what she said, she's been reporting income that, does suffice what she could get approved for in that area. But what I'm trying to just, bring full circle here is that if you're a business owner, if you think that you can't purchase, if you're self-employed, there's actual products that are made just for your type of income. And this is the perfect example for when they come into play. When, you want to buy a house, you don't report much taxes. Utilize these types of products that are out there. And I think it's just, finding solutions to problems right now that is going to really help buyers that are looking to, purchase, that are looking to make that sacrifice. There's options out there. You just really have to, dig in there, search, and, surround yourself with the right people.
Yeah, absolutely. You got the profit and loss statement. Just if you talk to your CPA, there's the bank statements that use all the deposits, the asset depletion that you actually mentioned. Some of us, some people have, $500, $1 million more on their 401ks, and you can actually utilize that. Fannie and Freddie Mac take it over 30 years, but there's what's called non-QM products that don't conform to the Fannie Freddie Mac guidelines that actually are a lot more aggressive, and therefore they go through 15 years, which makes a huge difference. So yeah, thank you for bringing out that point, because that's how to get creative in a lot of times.
Well, guys, that's kind of all I had for today. So what was your favorite part of the show, Brian?
My favorite part of the show, I think the $1 Million Starter Homes is really crazy. I don't think it was my favorite, but it was just the most alarming headline from all the articles. But I just think that a lot of people take that for what it is, that headline. And talking about how we gave that example is that you are able to buy $1 million house if you're ready. You have the right tools, you have the right people behind you. You just have to create that plan, stick to it, and make those sacrifices. But I don't think it's that crazy if you have the right organization.
How about you?
Yeah, mine is the April home sales dropped to, the slowest pace. Even though this article kind of makes people think like this is a negative thing, it's not a negative thing. What I got out of this is that's a good thing. Mm-hmm. Buyers are on the fence for a reason, and they're understanding because of all the information that's going out there. I think they're paying attention. I know they're paying attention, and they're understanding that there's going to be other options for them. So it's like, why do I have to pull the trigger on something which is going to be, again, one of the biggest purchases I'm going to make in my life? Why don't I just take my time with this and really see the true options that, could come my way? So patience, I know it's hard to do in certain situations because you get all excited. I'm approved, I'm ready to go, and I just want to get in. But sometimes just have that patience to take the time and really go into the property, really see it out. If this is something you see, you growing there and raising your family and creating memories in your home. So I applaud these people. Take your time, and there's a lot of uncertainty out there. The good thing is, it's just a matter of time. It'll get corrected, and you'll be fine.
Well, this is the first time in a number of episodes where we each picked a different article, because I'm going to go with the very first one with the House passing the reconciliation bill with the low-income housing tax credit stuff baked into it. I'm eagerly awaiting the outcome of this. I am hoping that this can get through. Again, I don't know what else is tucked in with it. I am concerned about that kind of always, but as far as the housing component of it and the potential for it to have another 500,000 homes, and maybe it all is in this little 5-year window that this little bond bump would assist with. I'm optimistic about that, and I'm really glad that you shared that there's a possibility for it to get continued or extended, because I just forgot about that. But I was like, oh yeah, that's right. Just because there's a deadline now doesn't mean it won't be extended later. We have seen that in a number of cases, but that slipped my mind today. So thank you for bringing that up.
Yeah, no worries. It happened with the ADUs, right?
That's right. Well, yeah, that's a great point. Yeah, I was like, oh, it looks this way, and then oh wow, it's really taken off. Well, let's let more of that happen. So yeah that's.
And now it went so fast. How to restrict it?
now it's like too fast, too far.
But we got to have those problems, you know, like we built too much houses. Oh, okay, let's get it.
Absolutely.
Yeah. But I think this could change literally some of the landscape of housing, which we desperately need. So I'm hopeful about that.
It gives hope.
Yeah,
it gives hope not only to first-time home buyers or existing homeowners. It gives hopes to people who are going to rent.
Yeah.
Who really don't have that job, that's going to be a 7-figure, because that's what we're going to need, 7-figure income in order to afford these properties, right? And so, I think bringing that up is going to be something that's going to satisfy these people that can't. They just can't do it, and there's many of them.
Yeah.
And so bring hope.
Yeah.
Let's make America affordable, right?
Yeah. Make America affordable again. Yeah. Well, thank you guys for a great show this week. And again, like parting thoughts, thank you for all of our families that watch this who have lost a loved one in the line of duty and in service. We sincerely appreciate you and do think about you on Memorial Day week and Memorial Day itself. So thank you all for watching. Remember to like this episode, subscribe to the channel, turn on notifications so you catch every episode right when we air it. And we'll be back again next week, the trio of us. And we have some really awesome and fun episodes of Friends of Mortgage Heroes airing this week and next week. So be sure to check those out and take a quick look at our previous episodes where we've had some really, really great friends of ours come by and just drop some nuggets of knowledge and share some good times with us. So we really appreciate your followership and your interaction with us online. Thank you all so much.
Thank you.
See ya next week. Bye.
If you like this video and like to subscribe, click here. And if you want to watch other videos, click here.